All right, mic plugged in, mic check, mic check. All right, just like that. And we're live. Thank you guys so much for tuning in. Oh, gotta move the water bottle. Gotta get the sign flexing, of course. But yeah, thank you guys for tuning in. Tetron Live. We're back Monday, getting the week started right. Hope everyone's doing well. Say hi, chat in a second. Got some various different stuff to go over with you guys today. Obviously, a lot of GameStop. I like to talk to stock. And I've been just looking at macroeconomics and just trying to wrap my head around private label products and just learning more about that. I've been generally familiar with it, but I just want to become an expert on it as it does seem to be something that GameStop really is going to focus on, based on things I've been looking up at least. You're more than welcome to disagree. And of course, I welcome the Bulls. I welcome the Bears. Thank you all for tuning in. If you could drop a like, that would be much appreciated. If you don't already, follow me at X/Twitter, whatever you call it these days, at Tetron Invest. Post updates on there, usually the live stream schedule as well at the start of the week. Like, hey, I'm going to stream Monday and Wednesday. That's what I'm mostly aiming for going forwards. That might vary a little bit. So, Monday and Wednesday, 7:30 Eastern. That's what I'm aiming for. So, keep an eye on that. Yo, first, Chad, thanks for being first. Thanks for popping in. Hope you're doing well. DB, hello. Hope you're doing well as well. We like the stock. Yes, individually, I do like the stock. And I would believe you watching this individually may like the stock as well. I am many people stuck in one body. Generations of knowledge, all agree GME's the one. Hey, DB, your words, not mine. But yeah, hope you're doing well, man. Thanks for being here. Hi, Tetron. Hi, everyone. Fresh Maker. Here we go. Now it's a party. Everyone's popping in. But today, GameStop was down a little bit. Markets were a little shaky in the morning and then overall closed positive. But, GameStop's always going to trade in the way it's going to trade. It is what it is at this point. I don't think any long term investor is truly surprised by any short term price action. And, it's continues to just be volatile, and it is what it is. I'll continue to focus on what the company's doing and worry about the stock price on a long term basis. Of course, I'll keep an eye on it day to day, but I really don't think too hard about it, and I just maintain a long term viewpoint. And I really feel that way about any investment I make for the long term, because if you're trading, like, obviously you're watching it every single day, whereas when you're investing, you're almost wanting it to go down so you could acquire it at a lower price. When you hold something though, like GameStop for a while, I definitely understand the perspective of you want it to start to accumulate in value. And I'm not saying I don't want GameStop to accumulate in value, but I'm just saying at this point in time, if you do have a long-term perspective and you're willing to continue to average down and just dollar cost average, just buy consistently. I personally think that's the best way with any long-term investment, just to buy consistently. So, like, I own a little bit of Palantir, I'll buy a couple shares here and there, and I have a very long-term viewpoint on Palantir and just what they're doing. I believe in it, and I believe in Alex Karp. I think they have good capital structure. They're starting to turn a profit. I'm not gonna go all into Palantir right now, but just an example of, I'm not buying just a huge chunk of Palantir out of nowhere. Like, I'm just buying a little bit here and there. And that's kind of been my approach with Bitcoin the past couple of years. I mean, with Bitcoin, I wish I bought it more consistently. I was buying like $1 or two a day for periods of time. Some periods of times I'd buy like $5 a day. Very, very small amounts, but that's what's best for me as an individual. And that was also with Bitcoin in that particular scenario, is a lot of like habit building for me. So that's really where I was with that. And we're definitely going to touch on Bitcoin a little bit later. The Bitcoin halving just took place. I believe it was this past Friday, right? Right around here ish. It doesn't matter too much. Historically speaking, the halving's been very bullish for Bitcoin. We'll see if that continues to be the case, and we won't really know for sure on that until it's about a year or two from now, because it's always easy to truly determine, hey, this did take place, this didn't take place, once it actually happens, right? So until we've had a good amount of time post halving, it's hard to know if, oh wow, this is the time that the Bitcoin halving, the trend is different. The price didn't continue to go up, or have a strong bull cycle. The bull cycle was going in and then it crashed. Or it will be in a year or two from now, oh, look at that. In hindsight, it was another bull cycle, right? But we'll get into that a little bit later. What I kind of want to move into first today is a little bit of 2024 predictions for GameStop. So I have pulled up here the statement of operations for 2023 and 2024, or I'm sorry, 2023 and 2022, because it's 53 weeks ended February 3rd, 2024. So that's fiscal year 2023. This one's fiscal year 2022. Just if you're not aware, GameStop's year, right? Because every company has their own version of a calendar year. Their year ends at the end of the last week of January. Or this year, because there's an extra week because it's like a leap year. So it's a little bit more funky, and it's actually February this year, but usually it's the very last week. Like when January ends, usually that's when Q4 ends. Because for GameStop, Q1, we're actually coming to a close in it right now. We got 8 days left. So Q1 is February, March, April. Q2 would be May, June, July. Q3 would be August, September, October, and then Q4, November, December, January. And they pretty much just do it like that to offset the weakness generally that is in January and a lot of the returns to take place just because of the holiday season. And by the same token, there's a lot of spending in November and December. So it's got a little bit of balance here. That's just a little bit of insight. So what I want to kind of do, I got my little canvas thing over here. If you guys aren't familiar with this, it's called Obsidian. It's pretty dope. You can make all these different, like you can put images together. So I put together the CandyCon graphic. You could put together a bunch of notes, images, right? So like I have some different notes here. Then I call it the GameStop Ultimate Canvas. Then I have a bunch of their numbers here, which keep an eye out on X/Twitter. I'll be posting these and just doing some little write-ups, about how the SG&A improved a lot year over year. I already put one out there about the margins. So revenue and net income. These are the margins, but so I already put one out about revenue and net income. But the margins in SG&A one is to come in the future. So keep an eye out for that. And various things I want to get into today, but just wanted to kind of throw down some predictions, and I already have it separate here. So if I type right here, just put a bunch of letter D's, it adds it in right there. So that's what's pretty cool about this. And then you can also do a lot of plugins. I got to still learn a lot more with how this works and how I can probably better myself and just better the structure of the information I share with you guys. But I kind of want to just put together some 2024 estimates. I just threw these down for now, and just because I'm going to make 2024 estimates now is not to say I'm not going to change it at a later date. I just want to have it where, hey, this is where my head's at now, and just kind of see what my perspective changes over the year. So I'll say, as of 4-22-2024. So what I'm aiming for is a gross margin of 25.5%. That would be a 1% increase year over year. Operating margin, I'm looking for 2%. We saw 0.65 to get particular. Here it rounds up to 0.7 for the net margin, or I'm sorry, the operating margin. And then on the net, we got 0.2, which was rounded up to the, or I'm sorry, 0.1, which is rounded down from the 0.13% that we saw in 2023. So for 2024, I'd really like to see the net margin get closer to 3%. That's kind of the number I'm looking at right now. And then operating margin 2%. So pretty much, operationally, technically in 2023, they weren't quite profitable. They were like just on the edge, and just a couple minor other tweaks should get them there. I absolutely see that happening. Then where they can get net margin up to 3, just a little bit more than operational, is you see here it's interest income net. That's net of interest income minus interest expense. Their interest expense is extremely low considering their only little bit of debt has to do with the French government. It's at a rate of below 1.5%. I think it's like 1.1, 1.2%. And by the way, their long-term debt is so minuscule. It's literally 17.7 million as of the last report remaining. So interest is very, very small compared to the actual interest income they're able to earn on cash equivalents. So that was 49.5 million for the year. And that's net. Again, that's net after any potential interest expense, which we have a very small amount due to those loans just mentioned. So with that, I would like to see the operating margin at 2%, net margin at 3%, gross margin at 25.5%. As of now, I'm going to go ahead and say these are some conservative estimates. This doesn't have to do with the revenue in any way. This is simply looking at margins. Come think of it, maybe we should throw SG&A in here. That might be another number to look at. And just kind of, estimating for now on the more conservative side. I think as the year goes on and as we maybe get a quarterly report or two, I can more accurately estimate what the full year 2024 may look like for the company. And definitely something to be on the lookout for. Will there be more products such as CandyCon, right? So I have some information here about private label and also a little bit of insight from Chewy that we'll be going into in a second. But to kind of finish where I'm at here, SG&A was 25.1% for the year versus 28.4% for the previous year in terms of percentage. Dollar-wise, there's a massive swing from almost 1.7 billion to almost 1.3. Rounding up and down there. So about a $350 million swing in SG&A. Let's pull this up here. Then I also love this. You can do this separately. So we go boom, boom, boom. Then let's pull up SG&A. So when I'm looking at SG&A, I see it went from 28.4 to 25.1, and it was pretty much flat year over year prior to that. And then before that, that's really before Ryan Cohen's involvement in any shape or form, and just new management and a lot of the different structural changes. So you have the SG&A in dollars in yellow, and then the percentage of revenue in blue. So in this particular case, and what we're estimating here, I'm really looking at the blue numbers. So looking at what we have overall and just seeing them continue to focus on cost cutting, I do expect SG&A to come down, but the X factor would be, is revenue going to come down as well? Because it's a percentage, right? So the percentage is based on the total revenue. So if SG&A goes down, but revenue goes down as well, then you're looking at a situation where maybe percentage-wise it's still 25.1%. Whereas if revenue's flat year over year, 2024 comes in to be about the same as 2023, then SG&A is slightly lower. You could be looking at a situation where this percentage-wise is lower because it's percentage of the total revenue. So with all that being said, I'm going to say for now, I'm going to look for them to get to 23.6% for SG&A. Maybe that's a little bit too optimistic, and that is based upon the assumption that I'm personally feeling at this time that they're going to be flatline in terms of the revenue. I don't think this is the year as of now, unless something changes. We see more with the private label where anything groundbreaking happens, where they're going to significantly improve margins and really, really grow things the way I want them to in the long term. But I think they're going to continue to cut costs, operate with more efficiency, and just continue to try new things and just manage their capital structure better and better as time goes on, and just operate as efficiently as possible. So we'll put 23.6. Again, it's just an estimate for now as of April 2022. I'm sorry, April 2022. What am I time traveling here? April 22nd, 2024. We are in the present, but maybe you're watching this in the past one day. Maybe future Noah is watching this in the past one day. In the future Noah, I'm Noah, by the way, if you guys didn't know. Tetron on here, Noah in real life. But future Noah or future Tetron, you might be watching this one day and going, damn, this is how it used to be. Like, you're so much better now. But so just going to keep improving, right? Something I've been doing lately is watching back my own streams. It's a little bit difficult to do because it's kind of weird, like, listening to yourself, but like I'm really trying to force myself to do it to just continue to be better. Like, I've been taking some notes for myself here, so do like some prep on the side. You can see like I have a million different pieces of information on the left here, and just try and do some reflecting afterwards. So I do reflections in here and preparation and all that good stuff. So keep an eye out for more on that. I went through CandyCon in the last stream, but for those of you that maybe missed it, you have the base controller. You have a couple pre-made controllers without any customization, like they come as is for $49.99. But if you go the customizable route, you can buy the base controller for $34.99. Then you could buy a combo pack, which would include the thumbstick covers as well as the D-pad and the faceplate. Or you could buy a faceplate, a couple thumbsticks, and then a D-pad, and you can mix and match it in any way that you'd like. Altogether, if you're mix and matching with the base unit plus the faceplate plus the thumbsticks plus the D-pad, you're looking at $52.96. Whereas if you just bought it pre-customized, $49.99. So just for less than $3 more, you can fully customize the remote to however you'd like. And then also, if you get bored of it, you can buy some more D-pad covers or thumbstick covers, even a different faceplate, and swap it out at some point. Maybe you get some additional remotes. Maybe a friend has it, or you want to give it to a friend. You could swap in some way or another. But some additional quick thoughts I had on it was potential for collaboration. We'll get PlayStation and Xbox controllers be next. marketing is essential. I think given the vibrant colors and it being a big part of what they're trying to do, which in my opinion, like a big part of what GameStop's going to try and do is private label brands. That's where my head is at this particular time. Not to say I'm definitely right. You're more than welcome to disagree, but it's definitely something I'm seeing as more and more relevant to what they're doing and being more a part of how they're moving forward. So obviously we'll see. Execution is key, but it's created by GameStop, so the margin should be, I'm going to say, very favorable. And then I think it was Scott who was here last stream, and he was saying like sports team collaborations and themes like that would be something they may be able to do. Because I had mentioned, potential for collaboration, but also I previously mentioned I really would like to see them do this some way, but the logistics have to be there. Is getting like streamers involved, like popular gaming streamers. The example I always use is Doctor Disrespect. Just I think he's like a very unique character. Like he's literally a character. Like he's playing a part, but imagine like Dr. Disrespect like sponsored merchandise, right? So something like that, but who knows? All just speculation there. But getting into more information about like the private label and some of the stuff I'm seeing that's making me feel the way I do now about what it could be. So shout out to White Rabbit 741. I'm sure you guys have seen him on X. He posts a lot of stuff about GameStop and just some other things. Does some options trades. He does his own thing. He posts a lot of different things that are relevant to GameStop and helps me keep up. A lot of times how I keep up with things is I see you guys posting stuff. So I do try and read it all. But just saw this post on Reddit. GameStop's private label senior manager on LinkedIn regarding CandyCon. Quote, it's not over yet. The next big thing is around the corner. Chackle lead tits. But hashtag GME, hashtag GameStop. So BL, Senior Manager, Private Label, Quality Management. The CandyCon controller wasn't manufactured. It was sparked by imagination. The GameStop private label team, Alex, Ashlyn, Brandy, and Shirley, envisioned a controller that transcended function. We saw a future where gamers could personalize their controllers, expressing themselves through unique configurations. So unique configurations that even more so emphasizes the idea of more collaborations. Maybe you can even entirely customize it with images of your own in the future, or just complete customization of some kind. We'll look out for that. But while we prioritize customization and delivery of a premium, high quality controller at an accessible price, our vision went deeper. We yearn to reignite the vibrant energy of the game community within GameStop stores. We envision CandyCon as the spark that ignites fun and connection at the local level. Imagine gamers customizing their controllers together, sparking conversations, and fostering a sense of community. That's the true achievement. We did it for the quote, oh my gosh, hashtag gaming community. Seeing CandyCon hit the market and land in the hands of gamers has been pure magic for the team. The positive reviews, the online buzz, and the marketing exposure are all testament to the hard work and dedication of the incredible team. It's not over yet. The next big thing is around the corner. So one of the first things that stood out to me when I read this, and I did actually comment reply it, said, nice. I love to see that there's a dedicated team for private label. I'm excited to see what comes next. One, I'm definitely excited to see what comes next because I want to be in the know and I'm curious what this means. It's not over yet. The next big thing is around the corner. Is that just, words on a screen, or how much weight does that actually hold? Time will tell. But I would imagine, you wouldn't just add this at the end of the post for no apparent reason. But with that being said, you always have to like temper your expectations, and I feel like just expect the minimum, because when you expect the minimum but then more comes, I feel like it's just that much better, and that's just the overall approach I have. And also I feel like just beyond GameStop, with any kind of investment or just things that are hyped up in the stock market in any shape or form, or with companies in any shape or form, I feel like it's almost always overhyped. So I naturally just have a tendency to take things as they are, just let them play out. Like just not try and like kind of be monotone about it in a sense. Not that I don't think there's potential for this, like, oh yeah, like this is so boring. No, more so monotone in that, okay, yeah, I think there's great potential for this, but also I'm gonna let it play out because I don't know anything for certain. So that's how I go about it, at least. But another post here, from Alex. See, Alex is mentioned. So B and Alex, part of the team. Alex Jones says, after 8 months of behind the scenes work, Candy, and not the Alex Jones you guys are thinking. I'm not that crazy guy. After 8 months of behind the scenes work, CandyCon, our very own fully customizable controller for PC and Switch has launched. What is special about CandyCon, I hear you ask? With CandyCon, you can customize and change appearance for your controller and simple and easy removal of faceplate, D-pad, thumbsticks to create your very own unique controller anytime you like. Anyone knows me will know that this is only just a start, and the plan is to build an ecosystem that brings back fans and collectors to do more than just change the color of your controller. So again, kind of touched on the community aspect and just having people interact. I think they're going to have to do a lot more than just the controllers, and it sounds like there's more coming, but it'll be very interesting to see how whatever comes next ties things together as the two different individuals are mentioning it too. So start your CandyCon journey now, exclusively at GameStop. Big thanks to the team, yada, yada, yada. Create, play, repeat again and again and again. So that's a little bit there. And then Fitzy put, shout out to Fitzy, Sean Fitzy. What a guy. Good guy. Followed me. Haven't talked to him in a while, but got to hit you up soon, man. When did GameStop start selling PC components? 38 results just for motherboard. Let's fucking go. So I know, Atrix is GameStop's brand, but this seems to be, or also yeah, ATX. But also, I've been seeing like more GameStop itself branded on the products, and it's hard to know because maybe there's some private label brands they already had, but they're rebranding them in some shape or form. So, again, I've really been trying to just see what's been going on with the private label brands, and I was reading a little bit about how Chewy. That's a big part of what they do, a big part of their growth when they were going from like medium to large and they were going public as a company. So this article here was from was it like 2019-ish, something like that. Private, yeah, 12/12/2019. Private brands fuel 40% growth at Chewy, an 80% increase in online pet retailers. Chewy's private brand assortment during the past year propelled the company to record third quarter sales and active customer growth. Online pet suppliers retailer Chewy continued to gobble market share during its third quarter, sales advancing 40%. The company's active customers account increased 32.8%, and average sales per customer increased to 360 from 323. Impressive figures, but equally noteworthy because it speaks to the stickiness of Chewy platform in the fact that 70.4% of third quarter sales were auto replenishment. So while GameStop isn't in the exact same type of scenario in terms of like auto replenishing things, it's maybe something they look towards. Is there something that they can add to their collection of products that is for repurchase and can be built into the GameStop Pro plan? But I didn't realize that a big part of Chewy's success was their private label brands and really growing those. So private brands, along with increases in pharmacy, also their own thing in house. They basically created like a pet pharmacy as part of their website for the company, are contributing to quote ongoing expansion in lifetime value and an equal or faster payback period that proves out proves out the efficiency of investments in new customer acquisition. We believe we are transforming the industry with our truly unique and personalized high bar shopping experience that builds trust and brand loyalty by keeping the customer at the center of everything we do. I think this point right here is very in line with what GameStop's trying to do and how they need to continue to move forward. It's like something they need to keep in focus. And transforming the industry with our truly unique and personalized high bar shopping experience. CandyCon controllers, truly unique, high quality, vibrant color products. Oh, I'm messing everything up right here. Sometimes you go too fast. It can just delete this one out of here. It doesn't delete it from everything though. Just deletes it from this canvas I have here. So, that kind of CandyCon seems to fall in line with that, and it is GameStop's private label brand. And my feeling is they're going to do more with CandyCon, but there's also going to be more private label brands that come. What they may be called, I don't know. Where we might see an indicator of it up front could be the trademarks and patents that come out, because CandyCon was a trademark that was filed. I keep mixing it up. And this is something I don't honestly have expertise on, is the difference between trademark and patent. Forgot exactly which one they have. But pretty much, just covers the fact that they own it. It's their private label brand, right? That's like the gist of it. But what I'm curious is, will we see another name come up in the trademarks or patents out of nowhere, and then that becomes a brand? Because CandyCon, I think it was filed in like November of this year, but nobody really knew what it was until just a couple weeks ago. It was like, oh, look at these new products GameStop has, and word travels fast. And I think the GameStop brand is aware of that, or like the brand managers, the marketing individuals for the company, because you don't see them spending a massive amount on marketing. Although naturally there is like the social buzz and community aspect of individuals talking about GameStop and their products. So I think they're capitalizing on capitalizing on that in a way by not having to overly spend on marketing. But at the same time, I think there is a lot more marketing to do to new customers and bringing them in the door and making them like sticky customers or repeat customers. And I think there's definitely a lot of room for them to repair the brand in the eyes of a lot of individuals who maybe stopped shopping there years ago and just think, oh, well, that's just GameStop has been falling off and that's it, it's done, right? Maybe they thought that since like 2019 and they haven't been to a store, maybe even later than that, maybe even 2017, right? They're just like, oh, I would only get $1 for my old game from like 2010. It's like, yeah, what do you expect? That's the thing I never really understood. People always knocking like the trading program. Like I know it's like a meme, like I get it, right? But at the same time, people like expect like, oh yeah, like this game I bought like a few years ago. Yeah, they're gonna give me like $30 of credit. Like that's just so unrealistic. Like it's a used item and obviously logistically like it has to be worthwhile for them. So I just like I get it, but I don't at the same time, if that makes sense, in terms of the people being like, oh yeah, like it's crazy like that you don't get anything for your old like GameCube games, right? I mean now certain GameCube games, right? Like Mario Party GameCube games actually go for so much on eBay. It's crazy. And I'm lucky enough to have one, and I'll tell you, I am never selling that because Mario Party for the GameCube is absolutely classic. I mean, Mario Party right now is epic, but the GameCube is just absolutely classic. It's very nostalgic for me. Me and my brother playing growing up, my cousins as well, and even just I remember having friends over, and it was like so intense. And Mario Kart, to this day, I'll play Mario Kart with the boys. It's such a great vibe. Like I don't know if you guys ever played Mario Kart. The only rules of the game are no drinking and driving at the same time, which basically just means if you're drinking your beer, you have to put your controller down on the table. You can't be driving your cart, and you turn off all the CPUs, right? Because obviously CPUs aren't drinking beer, so you have to make it even. So you get four people, turn off the CPUs, ready, set, go. You can either send your whole beer in the beginning, then do the race. You can drink, race, drink, race, however you work it out. By the time you've crossed that finish line, your beer needs to be done. But if you cross the finish line without finishing your beer, disqualified. If you drink at the same time as driving the cart, disqualified. And my friends, very competitive. Believe me, they will call you out if you're even in the air, right? Or you're like respawning and you start drinking your beer. Like, oh, your cart has to be touching the ground. Your cart has to be touching the ground, right? But it's a great time. It's a great time, and it's always nostalgic in a way, right? But getting back on topic here, private label. Just a little bit more insight from Chewy. And for those wondering, like, oh, why do you always talk about Chewy, or why people that are involved with GameStop, just because Ryan Cohen was involved in Chewy and now he's involved in GameStop, they're not the same thing. They're not, but it's the same concepts. And I think you can look at what's already been done with Chewy to get better perspective of where GameStop may be going and how the current management team at the very top thinks about the customer and just generally how they go about things, right? So this article here, Modern Retail, says Chewy has released three private label brands in total, the first of which launched in 2016. Despite relatively little marketing behind these launches, customers have embraced these brands, resulting in rapid growth of our private brands, which now represent a mid-single digits as a percentage of total net sales for 2018, stated in its S1. Push customers to buy more private label products, which offer Chewy a better margin, will help the company narrow its losses. But Chewy also got a boost when PetSmart started carrying its private label products in 2018. So would this be a route we see GameStop go one day? Maybe eventually CandyCon is licensed to like Best Buy, Walmart, Amazon, and GameStop gets a cut of those because it's their private label brands being sold in these stores, although their margins wouldn't be as big as if an individual bought them from GameStop themselves, and they might want to kind of maintain that. It is worth speculating that maybe it is something that happens down the line if CandyCon and potentially other private label brands begin to succeed. PetSmart and Chewy aren't cutting ties completely, as PetSmart remains Chewy's largest shareholder, but now Chewy isn't entirely owned by PetSmart. It's unclear how much shelf space PetSmart will continue to devote to Chewy. Uh, Pharmacy, Chewy launched an online pharmacy in 2018 to tap into the growing pet healthcare category. According to Package Facts, just 12% of pet medications were bought online in 2017, though 40% of pet owners bought products online. But Chewy now faces bigger competition. Walmart launched an online pet pharmacy in May, as well as in-store vet clinics. These have the advantage of having a brick-and-mortar presence like Walmart, though it may continue to lean on PetSmart's assistance. According to S1, is still paying a management fee to PetSmart for so long as the company conducts any pharmacy operations through a PetSmart subsidiary. So, that's all very specific logistics, but again, I'm just sharing this for perspective of where GameStop might be at and just how the management team is thinking. But, again, you guys are always welcome to disagree, just sharing what I think. But someone mentioned a Larry Chang LinkedIn post last stream. Fresh Maker, yes. No, I gotta find that one before the next one, because I don't obviously trying to go on my LinkedIn right now and have everyone start adding me and stuff, but I'll have to look out for that. Also, I barely even use LinkedIn. I have to figure out my password again, so I can't really find on the fly. That's also why you've been seeing me kind of show these screenshots from different people posting them online. But I got you. I'm gonna look into that for sure. And just also maybe there's some other stuff on LinkedIn about GameStop that maybe I'm missing, maybe other people working for the company are posting about, just to get more insight about what's going on, right? It's always better to know more. Wendy, hello, hope you're doing well, because I can. Sup, thanks for being here. Kingsbury, hello, hello, hope you're doing well, thanks for being here. Meagle, oh, hi Tetron, still holding. Meagle, yes, me too. That's why we're here, right? Talking the stock, talking macroeconomics, talking it all, right? But thanks for being here. 3 years later, still holding. Hi Tetron. Jackson's, thanks for being here. Yeah, me too, man. Yeah, 3 years. It's crazy. Time flies, a lot of lessons learned, a lot of experience. But as for me, I like the stock. I think it's a unique story, and I understand the Bears are going to be the Bears. They're going to have their perspectives, and it might seem crazy to people to be invested in GameStop, but I'm perfectly content with that. Everyone can do what they want, can think whatever they want. Like I said before, I welcome the Bulls, I welcome the Bears, bring them all. Hello, Manuel, thanks for popping in. No, Asus is one of the biggest PC part sellers in the world. It has nothing to do with GameStop private label. Thank you, Freshman. Yeah, I did trip up on that briefly. Because that's what I was kind of thinking. Like, I looked at this and I just kind of assumed. And then I saw and I was like, wait a minute. Like, that's not GameStop, is it? Because GameStop is Atrix, not Asus. Or Asus. Or Asus? I don't know how to officially say it. Asus. But no, thank you for correcting that. I do appreciate it. Jay, thanks for being here as well. Hope you're doing well. All right. So, I speculated to bring this up because I'm not a big tinfoil guy, right? But I don't know where I saw this. Like, someone randomly tweeted or something, and I didn't see it. And I just looked it up later in the day. I didn't actually even think it was going to be real. But I looked later in the day, and I was like, huh, that's actually pretty crazy. So, again, this is purely speculation, thoughts and opinions. But I found something very interesting that I thought I'd share. And again, take it with a grain of salt. Just like I was saying before, my natural approach is take things as they come. Don't get overexcited about anything. Just watch how things unfold. So, just going to watch how this unfolds, but I can't help but look and think, what does this mean? Or is this just some kind of like really, really weird coincidence? But everyone can speculate in their own way, right? So, what I saw was, this is what GameStop looks like when you search it up on the web, right? So this is what you get right here. GameStop, CandyCon, those are the first things coming up. I think it's also because the most recent websites I've visited has CEO Ryan Cohen, the revenue, blah, 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 right? But notice the little power to the player logo here, or this is their new little icon instead of like GS, which I believe it previously was. So I looked, I just saw someone post this, and I'm really not sure who. I would shout them out if I remembered the tweet I saw or where exactly I saw it, but I just saw it in passing. And again, I don't like to bring like quote unquote tinfoil, but this is just interesting, right? Build-A-Bear, If you look it up right now, I mean, someone tell me if do you see something different, please. Their logo, like when you look it up, their little icon is the GameStop power to the player logo, right? Like, is that not exactly the same? Like, again, purely speculation, like 100% speculation. Like, you can't just blindly assume something based on a logo. But is that not like nearly exactly the same? Like, I'm trying to see, is there like, it looks slightly more to the right and down than exactly in the middle, and this one kind of looks like that too. How far can you zoom in on this? Is it infinite? Let's see. Going insane zoom percentages. Are these not exactly the same? And again, like it could be nothing, but if it is nothing, then what is it, right? So like, I don't know. I don't know. Definitely, feel free to let me know what you think in the chat. And I just found it very interesting. I'm like, huh. So what that prompts me to think like what is going on with Build-A-Bear? I haven't even thought about Build-A-Bear in like a decade, right? I'm way too old to build a bear. Maybe I'll help my kid build a bear one day, right? But I looked at the company and I was okay, so what's going on with this? They've had a good past 1 year period, then an even better 5 year period, which is pretty remarkable considering it was nearly a penny stock, in 2020 when the pandemic hit. It went all the way down to $1 share. Now it's all the way up to $28 at this point. And I see they have a dividend, which hold your thought on that because that's not a consistent dividend. It looks like they're doing like one-time dividends, or they don't like if you look at like Build-A-Bear Workshop dividend history, it doesn't have like consistent dividends, just three over these past couple of years. And it looks like also in reading through some of their stuff, they've been buying back stock. And Yahoo Finance is always good for a quick overview, but if you really want the details, you got to look at the company's financial reports. So price to sales is less than 1, which means more revenue than market cap. Trailing and forward PE is about the same, and it's been pretty consistent for a while, and it's a relatively low number. And then moving on, they have a pretty decent balance sheet, current ratio of 1.5, current assets to current liabilities. So 1.5, pretty decent. And then I was okay, and decent insider ownership, about 6.42%. Decent amount of short sellers here. Not as much as some other companies, but then I looked a little further, and their investors relation is disastrous. I'm not gonna lie. Like this website looks like it's from like 2005. But some of the highlights here, just quickly go through it. Um, Fiscal year total revenues and pre-tax income increased 3.9% and 7.1% respectively. EPS increased 15.9% on an adjusted basis, and then 8.6 non-adjusted. So introduced 2024 guidance with expectations for growth in total revenues and pre-tax income, as well as net new unit growth of at least 50 experienced locations globally. 2023, company returned 42.4 million to shareholders through a special dividend and share repurchases, with 91.4 million returned to shareholders over the past 3 years. Company initiates a new quarterly dividend of 20 cents a share. So based on just this at face value, it looks like they're going to try and do this every quarter consistently, considering they said special dividend here and quarterly dividend here. Another milestone in 2020 reported our third consecutive year of revenue and profit growth. We believe our record results reflect our strategy to continue the evolution of our business model, inclusive of our ongoing digital transformation and broadening appeal of the Build-A-Bear brand. Last year's net new unit growth of 37 experienced locations across our corporate, partner operating, and franchise store models. Sharon Prince John, President and Chief Executive Officer. Looking ahead, we remain focused on our strategic initiatives to leverage the power of the Build-A-Bear brand, including a recent reorganization designed to further evaluate our digital and marketing efforts, plus the expected acceleration of net new unit growth to at least 50 stores globally. The CFO added, in conjunction with a Build-A-Bear's third consecutive year of sustained profitable growth in our 2024 outlook, we are pleased to initiate a quarterly dividend, which reflects our confidence in the company's continued financial performance and underscores our commitment to return capital to shareholders. So then you can see some of the numbers here, and I don't see that being in line with GameStop, like the dividend and just the commentary on the report. But looking a little further into the company, like I think this is actually the 10K here, and you can see the numbers themselves. Was this it? Yes. So you can see corporately managed locations. They open 9, close 1. So they're still like opening locations, and a lot of third-party ones they're opening as well, as you can see here. So for the past year, they opened 2020. Why do I always go to say 2022 whenever I see the number 22? It's so strange. Too many twos, I guess. But you can see they're still opening stores, and then also they're opening a lot of international stores. That's where they're getting a little bit of growth. So overview, you're looking at sales, net retail sales 93.9, commercials 5.2, internationals 0.9. Costs and expenses, this is a percentage of the revenue they made for each. So their highest margin is what they get majority of their revenue from. Their SG&A is relatively low, so they're just operating with low overhead costs. That's in line with GameStop. And interest income, they got a little bit. They do have a little bit of debt actually, I don't think they have debt. Because again, I'm just looking at Build-A-Bear for literally the first time ever. I've never looked at their financial information. Oh, 43. I did write it. Boom. So no operating lease liability long term and other long term liabilities. These are the only long term liabilities on their balance sheet. Everything else is current liabilities. And you can see here, they have a decent amount of cash equivalents, covering almost all of the long term lease liabilities. And if you looked at the lease liabilities, I bet it's for multiple years ahead. But what I'm trying to say, just in a nutshell here, is they have a pretty decent balance sheet. They're operationally profitable. They have a very large EPS. They grew it a lot year over year. They bought back a bunch of shares. Not a lot of shares outstanding in general. And just overall, looks to be a pretty efficient capital structure and just business that's operating well. And you see the dividend that was paid out here. So also purchase of common stock, cash dividends paid on vested participating securities. So all right in here, and still, their cash and cash equivalents for the year. Let's see, beginning versus end, still slightly up year over year, despite the share buybacks and the dividends issued. And again, I'm not saying any of the things they're doing. I'm just highlighting what I'm quickly read through today and quickly just reading the report for the first time and understanding where Build-A-Bear was at. I didn't even understand or was not aware that they were in good financial shape, but overall they are. So if theoretically, right, GameStop was to acquire, current market cap is 400 million. GameStop's balance sheet right now, cash equivalents is 921 million. But the thing is, if you're Build-A-Bear, why would you want to sell for your current value? So usually you would have to sell at a premium for it to be worthwhile for them. But, maybe there's some other plan, some kind of partnership. I guess theoretically it could be a merger, although I find that very hard to believe. I think, if anything, GameStop's going to do the acquisition, not necessarily a merger, or if it was maybe it would be a quote unquote merger, but it would be GameStop as like the primary parent company, and then Build-A-Bear becomes part of it. It's just interesting, right? Again, I'm just throwing a bunch of information out there. You guys think whatever you want. I'm not saying it's this or that. I'm just like, oh, that's interesting. Like the logos are exactly the same, like when you search them up right now. And then when you look at Build-A-Bear, you're like, oh, okay, like this isn't a company that's about to go under. Like their capital structure is strong. They're going international. I didn't even realize this. Maybe if any of you have kids, you'd be aware of this. Apparently, they made some like movie last year, like an official Build-A-Bear like movie of some kind. That's just more branding and marketing for them. So they're doing some interesting things. And I was looking into this lady, Sharon Price John. She has a lot of experience in the kids and toys industry. I was just looking through her Wikipedia. Not that you should blindly trust Wikipedia, but I was just looking for a general overview. So I feel like that gets the job done. She's got, experience at the Hershey Company. She's worked with a lot of kid stuff, licensing deals with Star Wars and Marvel. So she's got a lot of experience. So that's just some general information about the CEO. And then that kind of made me think, like, what about Newegg? Because people have long speculated the idea of GameStop acquiring them, because they have an even smaller market cap. But the thing with Newegg is they're not operating profitably right now. So you can see from 2021 to 2022, uh, numbers are going down in terms of the bottom line and also the top line as well. Although it looks like, they're trying to manage their capital structure and they're trying to manage it where, if they're losing top line revenue, they're not overly spending on cost of sales. And you could see SG&A went down year over year, and I couldn't find full year 2023. And I'm looking at companies like these two, and their investor relations websites are just not very good. So for Newegg, just for the sake of quickly going over it, I just grabbed an annual report, the most recent one I found. But I think their annual one is probably coming out very soon, if it's still 2022 is the last one. But all just numbers here, all just speculation. I don't know what any of this means, to tell you the truth. I really don't have like some overall thesis from all this, but you guys can think whatever you want. Um, yeah, I don't know. I don't really know, honestly. But it's all interesting stuff. It's definitely interesting stuff to look at. And just looking at the macro, looking at S&P, Dow Jones, NASDAQ. This is a 5-year chart, right? And you can see the NASDAQ up almost 100% in that period. The S&P up about 72.5%. And Dow Jones up about 44%. I wonder if we go to like a 10-year range. What's the performance look like? NASDAQ still ahead as expected. S&P ahead. NASDAQ, or sorry, Dow Jones not as much. But it's just, when you look way out in history and way zoomed out, it's just like the market has been too hot for too long. But at the same time, money has been printed too aggressively for too long. So you never truly know, right? And that's why I always invest in the long term, because it seemed like right here, right? Like, oh, especially the NASDAQ falling this hard. Like, here we go. Here's the long way to crash. But where here we are again. Now, is this just a fake out? Are we about to go all the way up here? No, but I truly believe that nobody truly actually knows. I mean, if anybody knows, it's politicians, right? You look at their trades and you're like, hey, how did you know that coincidentally right before it all became public knowledge, right? Whether it was the pandemic or it's certain particular stocks where they'll buy it into that company, and then suddenly, like a month later, news comes out, oh, this company has struck a major deal with the Air Force, with a contract to produce this or that, right? So those are honestly the most reliable indicators. But besides that, who can truly predict the market in the short term? And having said all that, it's important to remember the stock market is disconnected from the economy sometimes. So breaking, or here we go. Yeah, that's something else I want to get to next. But credit card delinquency rates at Discover Financial, the sixth largest credit issuer in America, just spiked to 2008 levels, according to Reventer. At Discover, credit card delinquency rates in Q1 2024 jumped from 4.7 to 5.7 in Q1 2024. So I guess 4.1 was, I guess, 1 year ago at this time, or it says, put this in perspective, delinquency rates going into 2022 were at just 1.5%. But this chart really tells you the story of where it's heading. And, this period of time, things were getting better. Everyone was getting a lot of money, and whether it be stimulus and just a lot of federal packages, just pumping money into the economy, and you really saw it reflected in delinquency rates. And now, just really starting to go up as interest rates are going up, and as stimulus money has kind of really started to circulate into the economy and not really be in the hands of the average like American. But this means that delinquency rates are nearly 4 times higher than they were just 2 years ago. Americans are still spending at record levels, even as savings have been depleted. Are we in a credit card debt bubble? This is a very good point at the end here. Americans are still spending at record levels, and I feel like you see it around you, right? I'm looking at the average person around me, and I feel like they're still spending a lot, even as savings have been depleted. Although for me individually, I feel like I'm much more aware of my spending now than just 2 years ago, where I'm like, okay, well, one, getting older, life's getting more serious, starting to really understand the value of money, or not the value of money, but just how much wealth you really need to build to like start your life and to just continue to accumulate wealth and keep building myself up in terms of owning assets and wealth and cash flow, just building all of that up. I realize you have to have a lot up front, otherwise building takes even longer because you don't have a strong base. So I'm trying to build myself a strong base before, go out, get married, have kids, and just take all the steps in my life that I want to take, right? But in the meantime, I'm just looking at macros as a whole, just doing what's best for me, and then trying to just understand everything going on, and then eventually, time the best point to buy a house. But I'm very, very far from that, so I'm not worrying about that right now. But this individual, Nick Girelli, and I'm not familiar with him, but he put in a lot more information that was just like an overview. Someone had put out Kiyosabi letter. They put out some, why do I say Kiyosabi? Kabisi, Kabiesi, I guess that's what they said. I don't know. So many weird names out there. But Nick went a little more into it. So, discovers recent issues with charge-offs mirror an industry-wide trend, with the Philadelphia Fed recently reporting that credit card accounts with past due balances spiked to the higher level on record back to 2020. I always going to say the wrong year. Oh my gosh. 2012. Credit card balances, percentage of accounts with past due balances. You can see the trend going up here. Credit card charge-offs slash delinquencies are spiking because Americans keep spending at record levels. And I think that just goes to show the lack of financial education across America. I can tell you, being a young individual, it's honestly scary sometimes hearing how people talk about money and just seeing how they treat money. And I'm like, oh my gosh, like, what is your plan in your life? Like, you go out every single day, you smoke so much nicotine, so much weed, you drink so much, you buy food every day. Like, how are you, and you, like, what is your game plan? Like, what are you doing? And I'm not saying I'm perfect, right? Don't get me wrong. I am not perfect. I'm human. I spend money. Like, I want to go out and have fun, but I'm fortunate enough to be conscious that it's a give and take type of thing. You have to pick your spots to go out. Like, I can't go out every single day or I'm just going to be exhausted and I'm going to have no money. So it's, financial education is so important. That's also why I believe talking about in money, economics, investing, all of it as a whole, and why I'm really passionate about it, because I grew up in a family where, not everyone was aware of that stuff. And, I have some older people in my families that don't have like any kind of financial education. And that's really where I got like passion to do it, because it's funny, like my grandpa worked on Wall Street. That's like one side of the family, but then the other side, like not as familiar. So I've seen like both sides of it, and how just understanding and willingness to build wealth is such a major factor in the long term for people. So that's why I'm trying to really get across, especially, of course, to anybody, but younger individuals out there, because I just see what it means for the long, long term, right? And in the short term, you're going to make a lot of mistakes. And I've said this in the past, and I'll say it again. I'm very fortunate to have made mistakes already. And what I mean by that is I've been messing around with the stock market, trying to trade and try every kind of crazy strategy since I was like 16 years old. I've had like a brokerage account, like attached, like part of my mom's name, part my name, and just trying out all these different things. And I was very fortunate, right? I was always trying to chase quick penny instead of the slow buck, or however the uh, expression goes. But basically, I was only, making like part-time income or just some money snow shoveling, and that's all I really had to invest and mess around with. So I was fortunate to not be able to lose a lot of money because I didn't have a lot of money. I was just literally a high school kid. So I made a lot of my investing mistakes in high school and early college, where I really didn't have a significant amount of money, and it really doesn't matter. Of course it matters, right? But in the long term of things, I realized that like that's so irrelevant, because now, working a full-time job, I'm out of college, like I'm really getting to the next chapter of my life, and I'm like, "Oh wow, I'm very fortunate that I'm not chasing like whatever coin to the moon, thinking like, oh yeah, like being naive, thinking, oh yeah, like it's just gonna go up a lot, and maybe if it does, like I'll be rich, right? Like there's people who don't even realize like, what the market cap means relative to the price. Someone's like, oh yeah, like I could triple my money on Apple stock next year. I'm like, ugh. unless you think Apple is going to like a $8 trillion valuation, like, sorry, I hate to break it to you, but that's not happening, right? But I'm completely ranting here, as I usually do in these streams. So I do appreciate you guys always tuning in. Drop a like if you haven't already. I really do appreciate that. But financial education is important, and learning is important. And I'm not here to teach people like, oh yeah, like do this and do that, and then move your money here, then move it there, and boom, you're rich, right? That's not what I'm trying to do. I'm trying to get people thinking and just understanding why building wealth is so important. And you don't have to agree with everything I'm saying. Like, I don't want everybody to agree with what I'm saying. Like, I have no desire in that. Or I don't ever want someone to be like, oh, I made so much money because of Tetron. Like, he said do this, and then I did it, and it worked out great. And on the other side of the coin, I don't want anyone to be like, oh my God, I blindly followed Tetron and he was so wrong. I lost so much money. I don't want anybody to blindly follow me in any way whatsoever. Like, I simply want people to hear what I'm saying, build it, like add it to their knowledge base and determine what they think about it, and help them as an individual get to the next level of their own investment journey, right? And I like talking about GameStop. That's like my main bread and butter right now. But I follow their stocks, follow macroeconomics, and I do look at things as a whole. And I really just am fortunate enough to have like a long-term perspective. And I see, on a long-term basis, this is probably going to continue with like credit card delinquency rates, because this is a credit card charge-off rate by issuer. And again, this is not just a Discover issue. Other card issuers all have reported substantial increases in charge-offs in the past last year. And then here's like the pre-pandemic line. But I don't, unfortunately, see this trend going away if spending continues to be as aggressive as it appears to be, especially amongst young individuals who are just financially naive. Interest rates continuing to go up, cost of living continuing to go up, and that also, I'm just thinking of a counter argument to everything I'm saying is maybe it's not even individuals being financially illiterate. Maybe it's situations where people are moving out of their house and starting their life and realizing quickly how expensive it is. And then they naturally, accidentally start to rely on their credit card, right? And all of a sudden they can't make a payment. And then all of a sudden they're not making their payments every single month, and their debt is just accumulating at a very high interest rates. Like, it can happen very fast, right? So all just off the dome here, all just talking very general. These surging card defaults puncture a hole in the notion of a quote strong consumer. I see the narrative floated a lot. A lot of people come with all types of statistics to justify it. However, the reality is we wouldn't be seeing the highest card default rates, yeah, credit card default rates in 10 plus years if the consumer is strong. It's a very valid point. And I always forget you could do this, the book format. It's so much neater. Similarly, we wouldn't be seeing historically low savings rates. The current personal savings rate is a measly 3.6%. That's less than half the long-term average and less than half that what it was prior to the pandemic. Such low savings are an indication of economic weakness, not strength. The only other time saving rates were this low was mid 2000s, right before the Great Financial Crisis. Concerning comparison doesn't mean Great Financial Crisis 2.0 is guaranteed, but certainly causes you to stop and think about what's actually going on in the economy. I think these are fair points. Although I will say, and kind of how this individual earlier on in the thread here touched on it, where was it? The surging card defaults puncture a hole in the notion of a quote strong consumer. I see that narrative float around a lot. A lot of people come up with all types of statistics to justify it. The reality of it is you could also probably come up with statistics to debunk this thread and some of the theories and ideas that are shared within it. But that's the beauty of macroeconomics and economics, stocks, money, finance as a whole. It's all for interpretation, and there's all kinds of stats and data, and if you stack it a certain way, it may look one way, but then if you stack it up another way, it might look like the completely opposite. So that's why I think it's really important to think for yourself as an individual, zoom out, like view all the information and determine what do you truly think. And then even once you determine what you personally believe, I feel like you have to have like the humility to be like, okay, like this is what I think based on everything I've read. This is my ultimate thesis, but I could be wrong. I could be wrong, and I have to continue to look for holes in my own thesis. And if there are holes, How can I patch them? And if I can't patch it, maybe the hole's expanding and maybe my thesis isn't as strong as I thought. So, all just my perspective and how I try and think about things. And it's easier said than done. But I really, really do try and do that and just have humility, then understand like I can be wrong about things despite what my personal beliefs are and whatever research I've done, because there's always a different perspective. There's always a black swan possibility, whatever the case, right? But to get through this here, ultimately, the situation of record low savings and surging credit card defaults is not sustainable. At some point, it will cause consumers to break. The only quote savior would be if wage growth surged well above inflation, giving consumers more of a cushion to absorb spending. And in terms of jobs and wage growth, a lot of that data seems to be skewed by the amount of people getting part-time jobs, right? Because if you think about it, if consumers are struggling, the average individual is struggling, and they go and get a second job, it's like, yeah, that's jobs growth, like a new job added. But if it's the same person just working a second part-time job, how much weight does that really carry in the data, right? And we've also seen situations where, like the jobs report, where I think it was fairly recently, out of nowhere, it was, oh yeah, by the way, the January jobs report that came out, yeah, that was way wrong. Like that came out in like April, right? We're in April 2024. I'm pretty sure I saw it. Maybe it was the end of March, but it's like, hey, wait, oh, now suddenly the report was wrong, and now the market's already priced that in, reacted to it, and then it's old news. Now it's just casually, quietly corrected, right? So it's just stuff like that you got to think about when you're looking at things as a whole right now. Current results on wage growth are unimpressive, to say the least. Plus 4.1% weekly wage growth year over year, plus 3.5% inflation. Real wage gains of a measly plus 0.6% over the last year, not really cutting it. Wage growth really needs to be 6 to 7% to make a dent. I think that's a pretty valid opinion right there. This is a pretty good chart. So my worry is skyrocketing card defaults, record low savings, combined with high spending, puts the economy on a unsustainable path, lots of downside risk. Curious what at Discover has to say about their charge-off rates. And I'm also curious to see, will this number continue to go up? I think I'm going to write this down right now. I try and write things down as I'm streaming, before I'm streaming, after I'm streaming, just try and keep up with everything. And as you guys have been seeing, with like Obsidian here, I've been trying to just take so many notes and get everything organized so you can have all these different folders and subsections, right, of different stuff I'm doing. But yeah, credit card default rates. That's definitely something to keep an eye on in terms of macro information, and then also savings rates. So it's a crazy world. It's a crazy, crazy world, because also something else that's going on is the reverse, the RRP. What is it? Reverse repo, where basically a lot of money that was on the sideline for a long time. Some people are saying like that's just what's been flowing into the market for the past couple months. And once that excess capital is gone, then what happens, right? That's to be determined. That's to be determined. But, I saw this today and I had to reply. Breaking. Radar hits. New York Stock Exchange is considering 24/7 trading, Financial Times. And I said, surely no suspicious activity will take place in 24/7 trading. No, what? And I loved White Rapids' response. If it happened while you're sleeping, then it doesn't count. So, oh man, it's crazy. It will be, if the market actually does go 24/7. That's just nuts to think about. Like, it just seems like really, really opening the door for chaos. But how does that even work? Does every market around the world become 24/7 trading? I guess it's one of those things that if that were to come into play, let's say first in the United States markets, it's likely the Euro markets and various other markets would probably follow, right? But that's, not for sure. Maybe one country does it, another country's like, this is dumb, we're not doing that. But I would imagine if one did it, a lot of them would follow suit. So I wonder if this is something we see in the next decade. I mean, that would be pretty nuts, honestly. I mean, we can't even get to instant settlement in terms of course, sorry, just seeing this in real time. Poll comes as U.S. regulators review Steve Cohen back proposal for 24/7 exchange. But yeah, I don't know. I don't really see this happening, but like I think it'd be horrible. But at the same time, like I feel like it could. We could see it in like 2032 or something like that. This comes into play, and that would be pretty nuts. And how you regulate that when you can't even get like instant settlement down? I think you have to get instant settlement before you go to 24/7 trading, right? That's what I think. Maybe that's not what the regulators think though. So we'll have to see about that. But definitely, I'm keeping an eye on Bitcoin as we did just hit the halving here. I was talking about it a little bit earlier in the stream how historically speaking, it's been the most bullish event for Bitcoin. And overall, just with the dollar being printed, currencies worldwide being excessively printed, because if you think about it, the dollar is being printed so much. And with the dollar being considered the world reserve currency, other countries are like, hey, well, we're going to print our country print a ton of currency for our country too to boost our economy, because as long as our currency is holding up against the US dollar, then I think we're in good shape because it's the world reserve currency, right? But now look at how the US dollar, is just still being printed, and it really can't slow down because the country has a deficit. Like, we bring in less in taxes than the amount we spend each year. So there's no sign of that trend stopping. Like, it's been that way for a long time. And now with elevated interest rates, you have to issue new debt to pay off old debt. And now you're issuing it at even higher rates. And they were talking about rate cuts in 2024. Now it almost seems like we get no rate cuts in 2024. So again, all just for you guys to determine as individuals what you think. I'm just throwing all the information out there. But looking at Bitcoin, this is a really neat chart here. I liked. Shout out Peruvian Bull for sharing this. He says we're still early. This is where we are in the current cycle from 2022 on. If history repeats itself, we will see another up cycle for Bitcoin over the next, I would say, 24 months or so. Again, nothing's for certain. Take this chart with a grain of salt. I'm just showing you for perspective. But historically speaking, the Bitcoin halving has always been very bullish for Bitcoin. And on top of it, this time you have a lot of institutions flowing capital into it, which we really didn't see as much in the past. A little bit in 2018 and 2022, but really ETFs have changed the game. So we'll see what's to come with Bitcoin. And it's interesting right now, the transaction fees are going up, but I saw that's like a separate thing. It doesn't exactly have to do with the halving. So yeah, I gotta look into that a little bit more before I get into it. But personally, I believe in Bitcoin as an alternative asset in the long term, and I understand it's not for everybody. I just look at it as risk versus reward. I think if it does continue to hold its value and the dollar continues to inflate aggressively, and not to mention other countries that are having way worse inflation than the United States, especially more underdeveloped countries where maybe the political structure is just a complete disaster and they're printing the currency like crazy and their purchasing power is being just diminished literally by the day in some extreme examples. I think those are countries where individuals flock to Bitcoin. So we'll continue to see if the trend continues to take place with Bitcoin, with the Bitcoin halving. Like, is it going to go up post cycle? But for me, regardless, why I'm buying consistently is I believe in holding Bitcoin for the long term. I really like the idea of buying just hodling. Although I will say, I've been accumulating some over the past couple of years with the intention of selling some when we're up in terms of the price cycle. And what I'm looking at is about 150 to 200,000 is the top of this cycle, roughly. Again, if history repeats itself, and that's where I'm looking to sell some. And then ideally, I want to see it fall off a cliff again and kind of have history repeat itself, and then continue to accumulate that whole time. But all just some general thoughts there, and I'll finish that summary of what I'm doing with Bitcoin. That if, let's say, the drop off happens now, Bitcoin crashes to 30,000 over the next 12 months, so be it. I have no problem just holding. I believe in it long term. So it's a long term investment with a little bit of a trade mixed in, but at the same time, I'm okay with just holding it long term. And it's kind of the same where something I'm doing with GameStop. I sold a put and I sold it for it expires January 2025, so we got about 8 months for that. If the price of GameStop is higher than the strike price of the put at expiration, then the put will expire worthless. I'll keep my premium. I'll get the underlying cash that is securing it right now because it's called selling a cash secured put. I'll go over that different day, different stream. But basically, I sold a cash secured put, and if it's above the strike price I sold the put for, I keep the premium, I keep the underlying cash that's securing it, right? And let's say GameStop is below the price I sold the strike at. Then I'm going to be buying the shares with the cash that was already set aside when I first opened the position. I think it was like 8 months ago at this point, something like that, where I opened the position. Then so be it. That cash will be used to buy Bitcoin at the strike price at the time of expiration. And so be it. Then I'll just hold GameStop shares in the long term. So it's a little bit of a trade, but also like a long-term perspective. So even if the trade doesn't work out, I'm okay just hanging on to it. Like I'm not really like I understand, when you're trading, you got to take your losses sometimes, but I'm really not a trader. I'm an investor, and then on occasion, like I make these type of moves, right? That I see best fit for me, and I generally try and structure them where like, hey, if it doesn't work out as a trade, I'm okay with just turning it into a long-term perspective because I understand this on a long-term basis. But again, this is all just my opinion. You're more than welcome to disagree. I'm always just sharing what I think. Everyone's should think individually. Nobody should ever just blindly follow other people. Like I really am against that. And unfortunately, I think there are some content creators out there, and don't ask me to say names, and like I'm sure you guys can kind of speculate some of the people I'm thinking about, right? And just to clarify, not White Rabbit, just because I have his tweet up on the screen now. White Rabbit 741, big homie, shout out to him. So I'm not saying him. Let me just quickly clarify that. It just happened to be what I had on the screen there. But I'm just saying, like, it's sad to see like people really take advantage of people say, oh, this is gonna be the next big thing. Like it's the best thing since sliced bread. Like OMG, everybody buy. And but if that happens to you, right, it's a learning experience. And I learned that the hard way in 2017 when it was like, oh, AM just all in on AM. Like I was just reading Wall Street Bets. Literally, I'm in high school. I'm reading it. It's like all in on AMD calls tomorrow. AMD to the moon, motherfuckers! Like, and I was like, okay, I gotta get some calls tomorrow. I gotta get some calls tomorrow. Come on, mom, please help me get options trading approved, right? And I was naive, right? I was 17 years old, and don't feel bad if you're older and that situation happened to you. I was just fortunate enough where I got involved, and just because of my personal interest in the stock market from however that came to be. I don't know. I guess a little bit of my grandpa and a little bit of just trying to think, well, how can I accumulate my wealth? Like how do the wealthy individuals out there do it, right? That's I guess where my interest came from. But again, I'm very very fortunate to have started at a young age because starting at a young age allowed me to make so many mistakes that gave me so much experience. Like I know there's a lot of other people with more experience than me, but it gave me valuable lessons to just hold with me and just find where I'm at as an investor and what I personally believe in doing, right? And again, everybody's different. I'm just here sharing what I think, throwing the information out there for you guys to determine. Just kind of giving you guys ideas to build off of. You guys throw stuff in the chat. You reply to my stuff on Twitter, wherever I'm posting, right? And then I read your responses. Oh, okay. Well, maybe I didn't think about it like that before, right? So I really do always appreciate the engagement out there. But yeah, having said all that, I mean, I think I'll pretty much wrap it up. I got through some good stuff today. With GameStop, going to continue to keep an eye on their margins. Gross margin 24.5, operating and net just about even for the year. So I think we want to see all these do a little uptick in 2024. This website's good for research, macrotrends.net. But you see here, you got to read carefully TTM, so it's the trailing 12 months. So right here, right, would give you, if you look at this number, that's the gross profit for the four, like gross profit, operating profit, and net profit for the 4 quarters prior, right? That quarter, like that period of time, and the 3 quarters prior to that. That's the trailing 12 months, right? So it's all of its data is based on the trailing 12 months. But just for fun, real quick, because we were talking about Build-A-Bear before, you can look at them. And you can see how they've really boosted their margins in 2021 and been able to sustain them. So gross margin jumped pretty significantly. Operating and net margin went from negative to positive. And you can see they were kind of floating around here uh, over the last decade or so. Little dip, little jump back, floating, 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 slight decline. Pandemic occurs, and then boom, big jump, and they've really sustained it. Obviously, it'll be a matter of them continuing to sustain it, but yeah, I don't know. Interesting. Again, strictly tinfoil. I don't really like to speculate like this, but what does this mean? What is this just a glitch? Is this a coincidence? Why is Build-A-Bear's logo on Google the GameStop like Power the Player logo? I don't know, and we may never know. Maybe nothing ever comes of it. Maybe something big does come of it, right? I don't know. And I'm not telling you to think any certain type of way. I'm just sharing with you. So it's like, oh, hey, I remember I saw it on Tetron's stream, right? When it comes up or it doesn't come up, right? And then one day maybe it'll just be, huh, I remember when we thought maybe there's something going on with Build-A-Bear and GameStop because of that little change when you searched it on Google. Huh, how naive we were. Nothing was truly to come with that, right? It could go either way. That's all I'm saying. But yeah, I think I'll pretty much wrap it up there for today. I really do appreciate you guys tuning in so much. Again, I'm going to continue to try and do Mondays and Wednesdays, 7:30 Eastern for the streams. And those of you that watch this back, I really, really appreciate that so much. I know everybody's time is so valuable. So anytime you spend supporting Tetron, watching, dropping a like, reading anything I tweet out, I really appreciate that so much. I can't thank you enough. But again, if you guys don't already, drop a follow for me at Tetron Invest on X. Pretty much just posting updates. I'll post when I stream. I'll post a schedule, as you can see here. I'll just tweet out like, good morning. This is from my fish tank. I have a freshwater fish tank. Got this cool picture of my albino shrimp the other day, so I thought I'd give it a share. This was at my girlfriend's house. I forgot. She told me the kind of bird it was. I know it's a female. I think it's like a female cardinal, not cardinal. Is it? I don't know. I just know she was telling me when we were sitting there looking. She's like, "Oh, it's a female because its whole body's gray and just like the beak and the tail is like the reddish color. If it was a male, it would be like all red." So learn something every day, new every day, right? But just tweet about GameStop. I've put out just some stuff like this. I think this clip is old but gold. I feel like it really gives perspective how Ryan thinks and views e-commerce. You can watch this for yourself. Firm's just talking about how at the end of the day, we just happen to sell pet products. Frankly, I think that if you're in the business of delighting your customer, I think that you could be very successful. I think we would have been successful in any category. I think it gives you the perspective of the kind of guy Ryan Cohen is, how he thinks about things, and the confidence he has in how he executes. Of course, how that entirely plays out in the long term is to be seen, and I'll be documenting the whole way. I'll be sharing what I think. You could share what you think, and that's just how it goes, right? I'll be putting out macro stuff. I like to create AI images too, as you can see for like the thumbnail, just for pictures. And like I said before, I welcome the bulls, I welcome the bears. All of it's much appreciated. So yeah, thank you guys so much for watching. Actually, gonna wrap it up here. Um, yeah. Oh my gosh, the chat. Wait a minute. The chat wasn't updating. I was like, no way. There's no chats like all this time. But I had the chat on my laptop here, and I wasn't even looking at it, or I was looking at it, but it wasn't updating. So let me go see it real quick. Let's see. Clear cache or try it in incognito mode to see if it stays. Jesus, thanks for being here. I'm gonna give that a try. I got you. Huddle games up forever. This weekend I'm gonna build a motherfucking bear. Nice, SG. Nice. Thanks for being here. All right, friends, let's get those likes up. Thank you, Anthony. I appreciate that very much. Sup, my man? BBW killed the shorts with a dividend, right? Yeah, Ryan. So share repurchases and dividends really hurt anybody betting against them, and I think that has part to do with the accumulation of the share price over the past few years or so. Middle class depleted savings keep adding to credit card debt, taking out loans against their house, auto loans longer than 5 years, bad mojo. Exactly, Anthony. Exactly. It's crazy out there, right? And it's also unfortunate because a lot of people are starting to take on debt and just have like high interest rates to pay because of just tough living situations, right? And just cost of goods, cost of living going up over time. Oh, Echoes, my buddy. See, like I said, Bulls and Bears, you're all welcome. My buddy Echoes is here. Thanks for being here. Will it close below $10 tomorrow? Maybe, maybe not. You have people sleeping in their cars waiting to become rich one day because they invested their life savings in a failed pawn shop. Are that responsible behavior? If people, for example, would have followed your economical advices since your first YouTube video, how much would they have been down now? I don't know, Echoes. From day one, I've never said, you should blindly follow me. And again, it's just my journey. You could take your own journey. It's all good. You are very bitter in the chat, but I do appreciate your passion and big support for Tetron. So thank you for that. See if I was checking it up. Your first video was December 2021. Oh, you know a lot about me. Thank you, thank you. So if you would have bought stocks from your advice back then, they would have been down 75% a day. Number one, don't give advice. I just think it's ironic how you can sit with a straight face talking about how to handle money responsibly, yet advise people to invest in one of the worst companies ever in the last couple of years. It's like you're an alcoholic preaching about drinking responsibly. Echoes, but that you're like missing what most of what I'm saying. It's about dollar cost averaging, and I understand what I'm getting in GameStop. It's a high risk, high reward investment by general definition. And I'm personally okay with that. And I think anybody invested in GameStop is. And it's also a situation where a lot of people are interested in GameStop, so I'm going to talk about it. It's that simple. But, you know, people like yourself, you honestly just encourage me more. So thank you. Thank you for being here. I really do appreciate it. Less useless concern about games will kindly step away from the quote worst companies ever in the past couple of years. Nobody cares. The opinion of Echoes or in a China, a sack of rice falls over. It has the same importance. Exactly, exactly. Freshmaker. GMU is going to the moon. Moa soon. 3 years ago, yes, but now it's just the suckers left holding the bag. Cheers. Wrong. You're holding bags of diamonds. How dare you? GMU's merging with BBBY. Bye. Yes. Come on, Noah. Slacking on the chat. Yeah, no, Ryan. Big time slacking. Oh my god. I'm just laughing because I'm reading it all now, catching up. I was thinking, I'm like, damn, Noah. I was like, no one's really going in the chat. Like, there's a decent amount of people viewing today. You know, got my solid like 25, 30 people here. You know, again, I appreciate you all individually very much. But I was like, hey, all right, I guess it's just a quiet day in the chat. It's all good. But I just wasn't updating here. So, but yeah, what's up, Tetron? Catching the end. Pretty Peter Lynch would be all over GameStop. Just saying. Exactly, Scott. You know, there's many reasons. My favorite quote by him, and a lot of people throw it out there, but there's many reasons individuals sell stock or insiders sell stock, but there's only one reason they buy. They believe the price is worth more. And we've seen that with Larry Chang consistently. We've seen it with Alan Adel once or twice before, and we've seen it with Ryan Cohen a couple times. And Ryan Cohen does have a lot of skin in the game. He doesn't get paid any. So, you know, his personal success in the investment or the company's success correlates to his wealth, right? If the company succeeds, share price accumulates, so does his wealth. And again, don't ever blindly listen to me, guys. I think anybody that watches Tetron knows that. I'm not in the business of giving financial advice. I'm just talking about GameStop because people are interested in it. But I'm also talking about economics because I'm interested in that, right? So, you know, Echoes, people like him, he's gonna have the passion, right? He's gonna come here, he's gonna throw stuff in the chat, and it's all right. It's the way she goes, right? If I feel like if I didn't have any haters, like I'm probably doing something wrong, right? So again, just always sharing what I think. I really don't mind. The Bulls can say what they want, the Bears can say what they want, but I just like GameStop, and I think it's an incredible journey. I'm gonna keep documenting on it. I'm gonna keep just going through things as they come. Like I said, I'm not into tinfoil. I'm not into over speculating. Like I like to just take things as they come. So that's just me. But yeah, dearest every day, son. Feral Mac, thanks for being here. There will be hitters even after most. Fuck them. Ball hard, bro. Thanks, Ryan. Thanks. Yeah, it is what it is, right? Sometimes I just kind of like it just makes me laugh. It really just makes me laugh because it's like you have people who have so much passion for just not liking something, and I'm just like, you're spending so much of your time and energy, but like you don't like it. It just doesn't make any sense, right? And just negative people in general, right? Even outside of the internet, people are just negative. It's like if you spend your focus on that, then it just swallows you up. It takes your time, and it just you know, you only have so many seconds to live in this world, so many minutes, so many weeks, so many days, years, decades, right? You got to make the most of it. So you know, last thing I'll touch on here, although I said I was going to end like 15 minutes ago and I keep going and going as per usual, but hockey playoffs, let me know what you guys think. Who's going to win the cup? Honestly, I think Panthers, Stars, or Oilers. I think Oilers get it done though this year because McDavid's due. McDavid and Draisaitl is just an epic combo. McDavid's my favorite player who's not on the New Jersey Devils because I'm a big Devils fan, but Oilers, I think they're just so due. McDavid is one of the best players in the world, if not the best. He had an incredible season, 100 assists, and I really feel like they have a strong team up and down the lineup, especially after the adversity they had at the beginning of the year. I'm not sure what the score of the Boston Leafs game is right now. Boston Bruins, Toronto Maple Leafs. But about to check out the end of that after this stream here. Big hockey guy, so if any of you are hockey people, definitely feel free to like throw in comments in a future stream or whatever about what's going on in the NHL, because I'm always following what's going on with that, because I love hockey, favorite sport. Big football guy too, but definitely hockey is like my favorite for sure. So, all right, enough ranting. Definitely not the Leafs. Yeah, Ryan, that's a fact. And you see William Nylander's not even playing, and it's like, what's going on? Like, he played the whole season. There's like no clear injury. It's like an undisclosed injury. It's a huge series. That seems odd. And I was looking at their lineup today, and I'm like, they're not as. I thought they were more stacked. They have like Bertuzzi and Domi on the first line. Are those really first line guys? I guess in playoff hockey, maybe because of their grit. But I don't know. I love the playoffs. I'm sad the Devils aren't in this year, but go Oilers. Hey, Devils only. Donko, yes, sir. This is the way. I think they're going to have a great bounce back year. I mean, they're also going to get, at worst, like the 12th pick. They can get up to, the first, second, or third if they're lucky with the draft lottery. But yeah, hockey's awesome, especially playoff hockey. Even if you're not that into hockey, I recommend watching like a game over the next 2 weeks. Like these are arguably the most exciting games. Like the first round of the playoffs, there's just so much energy. There's a lot of big hits. There's fights. There's a lot of goals. Like the Colorado Avalanche and Winnipeg Jets game yesterday was like 7-6. Like that's just an incredibly high score for a hockey game. But just two powerhouse teams going at it. So you gotta love it. But yeah, all right. Now, officially, actually ending. Thank you guys so much for watching. Have a great night.